Hi, good morning. I'm Shay Rowell with the Rowell Realty Group at Keller Williams Vestavia. And of course, I'm here with my counterpart, Andy Gagliano.
Good morning, Shay. How are you today?
I'm doing well. How are you?
I'm well, thank you.
How's your summer been? I know that's a random question, but how's your summer been?
It has been either extremely hot or extremely wet. It's
Okay.
been good. I don't feel like I've had much of a summer, so my son is older, so we don't have really a summer break where we take a vacation or that kind of thing. We all generally always take a trip in the fall
Mm-hmm.
because crowds are not as bad and things are a little bit cheaper, at least as far as accommodations go, and the restaurants you can usually get in and out of. So we're going to do something when the weather cools off a little bit and everyone's back in school. So really, my summer has not been much of a summer. But how about you?
That's typically what we do as well. We like to go when school's back in, right before it starts to get cold, and
Hmm.
just kind of mingle with the locals.
Yeah,
So, yeah.
yeah, same. So yeah, I'm ready for that. I hate to wish myself any older, but I could use a break from 96 degrees and
Yeah.
85% humidity.
Yeah. Yeah, I know that's right.
So I did not complain. We had what, 2 solid weeks where it was cloudy and raining,
Mm-hmm.
and I was not complaining about that.
I don't know. I don't know if I prefer the rain. I think I prefer, I think I hate to say that, but I think I prefer the heat
Ooh,
over
all
the
right.
rain.
Yeah. I
I,
mean,
I, I don't know. I feel like at least you can still kind of do stuff.
yeah. Well, the rain doesn't, in the summertime, the rain won't stop me from doing anything outside normally.
Well,
It's not like I'm going to go swimming during a thunderstorm, but
yeah.
other than that, or fishing, I'm going to get off the water and not be in a boat when lightning comes rolling through. But other than that, the rains, you know, it's warm rain, unlike the winter rains, so
Yeah.
I can handle getting wet. And besides,
Mhm.
it takes me from needing a shower once a week to, I get showers 3, 4, 5 times a week if I'm outside in the rain.
Mm-mm. I think that's the end of that.
All right, then. Well, we can just move on if you don't want to discuss that any further.
FHA loans.
In case you guys watching haven't figured it out yet, Shay and I love to have fun. This business can be stressful, and we take it very seriously, but we love to have fun and we love
Oh
to
yeah.
mix fun into everything that we do, including work. And so we're not above cutting up a little bit here and there.
No. No, we can always cut up.
Yeah, yeah. So
But then when
FHA
it's time to
loans.
go to work, we're gonna go to work.
That's right. That's right. Yeah.
All right,
So what are
let's
you
get into
thinking?
it. Let's get into so last time we did VA loans. Today, let's get into FHA loans. Let's kind of do a deep dive on pretty much what we did with VA, but for FHA.
Okay. All right. So here comes the 30,000 foot overview with FHA. All right. FHA is, first of all, it stands for the Federal Housing Administration, and that's the federal entity or department that oversees the FHA loans. But really, you'll also hear them called HUD loans, or you'll hear the term HUD a lot when people are talking about FHA loans. So if you're just kind of thinking about the tree, the organizational chart was the term I was looking for. And what you would see is that HUD is here and FHA's here. So HUD is over some other departments. And HUD is the Department of Housing Urban Development. They oversee FHA. FHA has this great program that was, I think it was rolled out. Goodness, they just had an anniversary this year. And I want to say it's their 60th year, if I'm not mistaken. So they've been around for a while, but the reason that they came about was back in those days, home buyers had to put down 20% to get a conventional loan. And so, yes, houses were much, much, much cheaper back then, but still, you're talking about needing 20% down payment to purchase a home was a tremendous hurdle for a lot of people. So FHA came out and said, hey, we want to help people be able to get into a home with a lower down payment and even help some people that conventional lenders are overlooking that may be a good risk. So how can we do this and make these loans attractive for buyers in what we call the secondary markets? And without getting into all the details about that organizational chart, what ended up happening was the government said, okay, we, the US government, are going to guarantee or insure, is the term they use. We're going to insure these loans with lower down payments and for people that have a little bit more marginal credit or maybe don't have credit. And if these borrowers default on their loans, then we, the federal government, are going to ensure the lenders that they will not lose all of the money that they could possibly lose in the deal. Very quickly, what do I mean by that? Well, if a lender loans $200,000 on a property that's worth, say, 210, then if that lender comes in and has to foreclose on that property, they may sell that property for 180,000 instead of the 210 that it's worth, just because they don't want to be in the real estate business. Banks generally do not make money by being in the real estate business. So they're looking to offload these houses that they take in on foreclosure as quickly as possible for as much as possible. So they may sell that property for 180. And in that case, if they loan 200, well, they just lost $20,000. So to entice that lender to make that loan, the government says, hey bank, hey lender, we're going to ensure that the loan that Andy is a good borrower and that if he defaults, we will pay you a large portion of that $20,000 that you are going to lose on that transaction. We'll pay you that money back. And so the way the government does this is through the FHA Mortgage Insurance Premium Fund. So I'm incorporating this big part of FHA into this explanation. This Mortgage Insurance Premium Fund is a pool of funds that every home buyer and every borrower who gets an FHA loan contributes into. Now, they contribute into that fund when they purchase a home. They'll pay 1.75% of the loan amount into this fund. That's paid up front. Now, FHA does allow them to add that back onto their loan amount. Enhance that 1.75%, what we call upfront mortgage insurance premium. In addition to that, every month that that homeowner makes a mortgage payment, there is a monthly mortgage insurance premium rate that is part of that mortgage payment that that homeowner makes. And that mortgage insurance premium also goes into that fund. So what ends up happening is you have all these people contributing money into this fund. And then when one of them defaults, the government's able to come in and tap into that fund and pay back the lender that lost some money in that transaction. So that's kind of the basis about really how FHA came about, how the inner workings of FHA are, and how they're able to do what they're able to do, which is to loan typically a larger percentage of the sales price of a home for someone who may have a little bit more marginal credit and or no credit, as I mentioned. And it's a great program. It is, there are hundreds of thousands, if not millions of people who've been able to get into homes that have never defaulted on their mortgage, but they were able to get into a home through FHA when they would not have been able to get into a home otherwise. And so the government accomplished their mission and what they were trying to do with that. And, it's a fantastic program. So I want to talk a little bit more about the program now. I mentioned that FHA allows a buyer to be able to purchase a home with a little bit lower down payment. So FHA's minimum down payment is 3.5% of the sales price of the home. So just to throw some numbers out there, if you're talking a $200,000 home, well, you're talking a $7,000 down payment. Now, today, there are, goodness, I just saw the number earlier this week, and I want to say the number's 2,400. There are over 2,400 down payment assistance programs out there that are allowing home buyers to be able to tap into those down payment assistance funds and get money for their down payment and possibly their closing cost so that they essentially don't have to come up with that $7,000 in that example. They could get down payment assistance funds for $7,000 and that would cover their down payment. And so these down payment assistance programs are helping buyers get into homes without having to save a bunch of money for down payment and closing costs along the way. So that's a great option. Those are available for FHA. And of course, a lot of them are available for conventional loans and VA as well. But primarily, the vast majority of those are going to support FHA loans and FHA buyers. And so that's one of the big things with FHA. Now, the other thing I'll say, the big difference, but another big difference between FHA and a conventional loan is that credit score requirement. And I've talked about that a lot. So up to this point,
Like
I've
how you're
talked about it a
answering my
lot.
questions.
Well, good. I'm glad I'm answering these before you have them. That'll be a first. All right. So the way the credit scores work is FHA does not have a minimum credit score requirement. I'm going to say it one more time. FHA does not have a minimum credit score requirement. But here's the deal. FHA or HUD will do audits of loans closed by banks and lenders. And they're auditing the quality of those loans. So even though FHA doesn't have a minimum credit score, lenders are going to set a minimum credit score because they want to be sure that their borrowers, their loans that they're closing are going to fit HUD's or FHA's requirements when it comes to an audit. They're going to fit their standards. And so most lenders and banks set a credit score on FHA of 580 as the minimum credit score. Now, we at Gagliano and Mortgage happen to have a lender that will go down to 550 on a credit score for FHA. And I think we talked about this before. There are lenders and banks out there in the market who say they do something and they may do one or they may do two of them. They don't do them very well because they really don't want them. I'll give a perfect example. A lot of lenders say they'll do mobile homes or single wide mobile homes, but they don't want them. And they absolutely will pick them apart in underwriting because they set their standards for those programs, those properties, so high that it's almost impossible for your average property to meet those standards. So a lot of, to carry that back to FHA, a lot of lenders will say, hey, we do loans for borrowers with a credit score down to 550 on FHA. But what they do is they make the standards for those 550 credit scores so high that it's really difficult for a buyer to qualify for those. Here's where we're a little bit different, and shameless plug for us. Our lender that does 550 credit scores on FHA, and they also do that for VA, they do those programs very, very well. They have a set standard of guidelines that someone with a credit score below 580 has to meet. If they fall within that 550 to 580 credit score range, there's a I keep saying set of standards. There is a set of standards that that buyer has to meet, and if they meet those standards, it's a done deal. And it's not a list of 20 things. It's 3 or 4 things that we really have to keep an eye on and really have to watch to make sure that that buyer meets those. And if they do, we're closing that loan. So there's a little bit of play out there. You know, what I would say to anyone watching this is, because one lender says to you, well, your score is this, it doesn't fit our guidelines. Don't take that as the gospel truth, because, like I said, FHA does not set standards when it comes to credit score. They don't set a minimum. And there may be a lender out there that will do a credit score on FHA down to a 520. I don't know. But that's something that, you know, if your credit's turned down, then I would say, or if you're turned down because of credit, I would say get on the telephone and start making phone calls and try to find a lender that will offer you a loan based on what your current credit scores are. The other alternative is to work on getting your credit scores up, and that's something that we also do here at Gagliano Mortgage. We help with that, you know, just giving some guidance. We're not credit counselors by any means. We're not certified for that. We're not licensed for that. We don't make money off of that, but we feel it's our job when someone comes in and they don't meet our credit standards. It's our job as human beings to say, hey, Andy, you don't qualify based on where you are today with your qualifications, but you may want to try doing A, B, and or C and see if that will get your credit scores up, and then maybe you'll qualify then. We do that because that's how we would want to be treated if the shoe was on the other foot. So again, another shameless plug for us, but all right.
Yeah, I
Have
was supposed
I,
to be plugged in today.
have I given enough info on FHA and not answered all your questions? I know you have more questions for me.
Yeah. Well, I just have like discussion points that I want to hit.
Okay.
But yeah, no, that was really good. So the first thing I do want to, first of all, I do want to say thank you for the conversation about going to different lenders, because a lot of times people don't know that. And, they may have this conversation with a lender who says, and they don't word it the way that you just said, where they're saying you don't hit our guidelines. They're just telling them that the the credit score is not where it needs to be, or it's not high enough.
Yeah.
And sometimes a buyer will take that as this is what everybody's going to say.
Yeah.
They think that it's just a standard guideline across the board and don't know that there may be a lender out there that will do it for a lower credit score.
Yeah.
So good point with that. The first thing I did want to point out is um, I'm glad that when you started off, you told us what FHA stood for, because some people think that FHA loan is a first time homebuyer loan.
Mm,
And so I kind of wanted to hit that.
yeah. I'm glad you brought that up. And, you know, there's so much to FHA loans that, you know, because I've been in the business for so long, I think that everyone knows, you know, when I know not everyone knows, but it
Yeah.
does not stand for first-time home buyers. So you can be a first-time home buyer and get an FHA loan, or you can be a 100th time home buyer and get an FHA loan. There are no limits on how many times you can use FHA for your mortgage.
Yeah.
And, this is something that's very important to share. I think that if you're looking at a buyer's preference for mortgages, I would say probably looking somewhere like VA and conventional would be your what most buyers are
Okay.
trying to achieve when it comes to mortgages.
Right.
And of course, VA, if you're not a veteran or your spouse is not a veteran, you're not getting a VA loan. So that would leave the vast majority of people out there trying to get a conventional loan.
Mhm.
But FHA right now in today's market, and today is August 1, 2024. So if you're watching this on August the 10th, 2026, it could be completely different. But in today's market, what we are seeing is FHA loans have an interest rate that's about 1% lower than a conventional loan. So even if somebody's a second time buyer or a fifth time buyer, they may end up with a lower payment on their mortgage if they just look at FHA. And so some people say, well, what about mortgage insurance? Because it's a that's a deciding factor for a lot of people when it comes to FHA. FHA has much more stringent standards on mortgage insurance. So every conventional loan that has mortgage insurance on it, that buyer or borrower has the opportunity to drop the mortgage insurance off of that loan upon meeting one or I should say one of two conditions.
Oh,
FHA, what was that?
I know one of the conditions. I didn't know there were two conditions.
Okay, yeah, so there's two, and all right, you've talked
I'm
me into
sorry.
mentioning
I'm
those.
sorry.
I was going to glaze over it because it's we're not talking
No,
about
no, go
conventional, we're
ahead. Go
talking about
ahead.
FHA. But no,
Yeah, go ahead.
I'll
We'll do it
touch on
in
them.
the.
Okay, I'm going to touch on them real quick. All
Okay.
right. So the first condition is if they've paid their loan balance down to 78%
Mhm.
of what they bought the home for. The second condition is they can get what's called an automated valuation model or an appraisal or what is called a broker price opinion from a realtor. There's a cost associated with that, but they can get that updated value of the property that they own. And if they can prove that the property has appreciated in value enough to where they only owe 80% or less of that new value, that new established value of the property, then they can get the mortgage insurance dropped that way. So those are the two ways that a buyer can get mortgage insurance dropped on a conventional loan. With FHA, there are not very many FHA borrowers who are going to have the option of getting the mortgage insurance dropped off of their FHA loan. They're going to have to put a larger down payment on the home than 3.5% in order to even be able to get the option of dropping mortgage insurance. But here's the thing, and I think that we all as humans get caught up in this. We get caught up in, well, what's my lowest payment today? What's my best option 5 years down the line or 7 years down the line? And let's make a decision and move forward. And I totally get that. But what is what does your life look like 5 years or 7 years from now? Are you truly, do you truly think that you'll still be in this house in 5 years or 7 years? Not just that, but do you truly think you'll still have this mortgage in 5 years or 7 years? Will there be a need for you to cash out some of the equity that you have in your property by refinancing your loan? Will there be an opportunity for you to get a lower interest rate on your mortgage by refinancing in 5 to 7 years? And if so, then maybe you don't worry about the mortgage insurance and the possibility of being able to drop that off your loan. So there's these outside factors that no one really knows for sure because we can't predict the future,
Mhm.
but there are these outside factors that may very well point to where it makes a lot of sense financially to go with what suits that buyer's short-term financial goals instead of looking at those long-term financial goals of, hey, I'm going to be able to drop mortgage insurance off of my conventional loan in 10 years. Yeah, you probably will be able to, but are you still going to be in that house in 10 years? If you're going to sell it in 3 years to 5 years, then don't worry about that. Go with the cheapest payment today, even though you may not have that option of drop that cheapest payment being FHA, even though you may not have that option of dropping the mortgage insurance on that loan ever. So those are things to think about and conversations to have with your mortgage loan officer and your realtor. And, really talk about this because buying a home is a tremendous financial decision. It is your, for most people, their largest asset that they will ever own. And we as buyers, we as consumers need to think about how we can maximize the appreciation of that value and how we can minimize our cost of purchasing that asset. And so those are ways that we can do that. But that was a good question.
I like how in that answer you answered like 3 or 4 more of my questions. You
Doing
just been
good.
on it today.
I'm doing good.
Okay, so well, you literally took my next spin. Okay, another thing that I wanted to mention, since we're talking like the differences between FHA and conventional and FHA and VA, when we talked about VA, we talked about how there's no need for a jumbo loan, and in FHA, there is a need or could be a need for a jumbo loan because there is a loan limit. So I did want
Correct.
to mention that.
Yeah, that is a great point. Yes, there is an FHA loan limit, and every county has a limit as far as how much FHA will loan on a mortgage. Now, I want to throw out a couple of things about that limit. Number one, I just mentioned that limit will vary based on the county. Some counties are real estate's very expensive. Think about, I don't even know what county San Francisco, California is in, but that county real estate is very expensive. So FHA has a much higher limit for that county than they do, say, for Jefferson or Shelby counties in Alabama. So that limit's much lower, but it's very, I'm going to tell you, I don't know what the percentage is, but I would bet 60% of homes in Jefferson and Shelby County today would qualify for FHA financing because the loan limit for those FHA loans has increased so much over the past few years.
Mhm.
Now, with that being said, that limit changes every single year now. It used to change once every blue moon, but now it changes every single year. So that's great because that keeps FHA in the mix as property values go up annually. And most of the time they do, not always, most of the time they do. And it's what we as homeowners really want to happen. But as they go up in value, then FHA limits are keeping up with those home value increases, home price increases. So that's something else I wanted to throw out there. One other thing I wanted to throw out about FHA loan limits is just because a loan limit is there, if you're buying a house that exceeds that loan limit, well, that just means that you have to put more money down in order to qualify for that FHA. So if you're buying a house that's $100,000 over the FHA loan limit, then you have to have a $100,000 down payment. That doesn't necessarily mean, again, that FHA is a bad loan option for that buyer, because they could very well get a lower payment on an FHA loan than they might get with a conventional loan. So those are things that we have to look at and really kind of weigh out for each application that comes in, especially right now with the market being the way that it is for FHA and VA loans, with the rates being much cheaper than conventional. How did I do then?
That was good.
All right.
Yeah, look, I think we pretty much hit it. The only thing we didn't talk about was the appraisal, which is
Yeah.
we talked about the differences between the FHA and the VA, but the appraisal is kind of similar to the VA in that they have that kind of inspection tied to it.
Yeah. And, I will say I'm going to overstep my bounds a little bit, get out of my lane just a little bit and get into the real estate world, just because it ties into the whole picture about FHA appraisals. A lot of people confuse an FHA appraisal and the inspection that the FHA appraiser does. They confuse that with a home inspection,
Mm-hmm.
and they think
Why
that,
my inspection was like inspection, not
yes,
general inspection.
yeah, they think that, well, the appraiser is going to be very strict when he or she goes out to appraise a property, so I don't need a home inspection. And I'm going to tell you that an FHA appraiser is not looking at everything that a licensed home inspector is looking at when the licensed home inspector goes out to inspect that property for you as part of your due diligence in
Mm-hmm.
researching that property. So personally, I recommend still getting a home inspection. In fact, there is a form that's required by FHA that basically tells the buyer to get a home inspection. And so, because there's been so much confusion about that over the years, that the that FHA came out with this form to alert buyers that there is a difference. And so, with all that being said, yes, FHA has an appraiser go out to inspect the property. They're looking for safety of that property. They're looking at the structural soundness of that property, and they want to be sure that there's no hazards. Does your stairway coming down from your deck in the back of the house, or the stairs in the front of the house, does it have a handrail? Because, people can fall. Think about it. Elderly people a lot of times need help getting up and down stairs. Not just elderly, but, handicapped people need access into and out of a property, and those handrails are important. So it's not just for safety, but it's for accessibility as well. So things like that are things that an FHA appraiser is going to look at when they go to inspect a property. They're going to look for wiring issues. Are there junction boxes that are not closed that have exposed wires in them? That's a huge safety hazard. Broken glass. They're going to look at that. That's a safety hazard. So certain things like that, an FHA appraiser is going to look at, but still, I'll recommend a home inspection on top of that FHA appraisal.
Sorry, I got distracted with people
That's
outside.
okay. That's all right. So I don't know. Did I leave anything off of that FHA
No,
appraisal?
no,
Okay.
no, that was good.
Okay.
Honestly, I think we hit it this time. You did,
Awesome.
you hit it this time. You
Well,
literally took all the words out of my brain and out of my mouth and off my notepad, and you did it.
I
No,
mean,
thank you.
I can
Made
just
my
say
job easy
this,
this time.
great minds think alike, Shay. You know, if we weren't both brilliant, then I just, this video would have been much longer and more difficult.
You know what? I'll take it. I'll, t- I'll take that.
You should take it. Now, me, on the other hand, that's a different story for a different video on a different day,
Lord.
but
Okay,
you got this
so
covered.
in the roundup, um, FHA does not mean first time home buyers, which by the way, first time home buyer doesn't technically mean that you've never bought a house.
True.
Um, so first FHA does not mean first time home buyers. Anybody can use an FHA loan. There is a loan limit on it. The FHA loan does come with PMI. However, the FHA loan has a down payment of 3.5%, a minimum down payment of 3.5%. Um, Most lenders will ask for a 580, but you can shop around if you don't have that 580. What else? That's pretty much it.
Yeah.
It's straight, it's pretty straightforward.
Yeah. And look, I talked a lot about this in the video we did about VA loans. FHA loans today are not the same FHA loans that they were 20, 25 years ago either.
Right.
These loans are much easier and much quicker to get done.
Mhm.
We're closing those in 2 weeks as well, so
Oh, Andy.
they're not a bad program. And, I would just say again, for buyers out there, if you get into a competitive offer situation, if you're making an offer using an FHA loan, sometimes sellers are going to look at that a little bit more negatively because the appraisals are much more strict than a conventional appraisal. But right now, and again, that's one of the reasons why Shay and I, for the past, we've been doing these videos for 7 months right now.
Yeah.
So the past 7 months, we've been saying today is the day to buy real estate in Birmingham, Alabama. One of the reasons why is because sellers are more open to looking and considering all offers. And that means an offer where you're asking for closing costs to be paid as a buyer, an offer where you're asking for a home inspection, an offer where you're asking for or telling them that you're going to get FHA financing or VA financing. So sellers are more open now than they were back in 2020 and 2021 when they
Mhm.
were getting 10, 12, 15 offers on their homes that they had for sale. So it's a great time right now. The rates have been coming down over the past month. I really think I'm going to eat these words, Shay. I probably shouldn't say it. I really think we've turned the corner with rates and we're in a little bit of a downward trend. At some point, we'll levelize, stabilize, and stay where we are for a little bit longer. That time's probably coming up soon, but right now, rates are great. And, I still believe in a year or 2 years, there's going to be an opportunity for those buyers who are even getting an FHA loan or a VA loan today at that 6.125%, 6%, 6.25% range, there's still going to be an opportunity for them in a year or 2 years to be able to come in and refinance those loans and get those rates at a lower price. Why not buy today when you as a buyer have a little more bargaining or negotiating power? So
Mhm. You
I'm,
see, I had to knock on wood for you.
yes, thank you. And I'm closing on that. That was my summary.
Okay.
So,
Yeah, I think this was good. Thank you,
well,
as
thank
always,
you.
for your wisdom, for your knowledge, and for the opportunity to come on here and share that. So thank you.
Well, Thank you. I appreciate it. You better stop. You're going to make me blush. My face is going to match my shirt today.
So since we did a lot of the comparisons to conventional, I think next time it's only fair to jump into the conventional loan.
Okay.
All right. So we'll be back in 2 weeks for that one.
That sounds great. I'm looking forward to it. I appreciate the opportunity. It's always good seeing you and always fun doing these videos with you. And if someone wants to contact you about going out and looking at some homes to purchase, how can they do that?
You can give me a call at 205-567-9713. What about you?
All right. I can be reached in the office at 205-979-4412, and I'm at extension 1.
All right. Thank you, Andy.
Thank you, Shay. Thank you, everybody, for watching. Y'all have a great week.
Bye.
Bye.